Have you ever wondered what happened to gold and silver when they stopped being the world's primary currency? This isn't just a historical curiosity. It's a fundamental question for anyone seeking to understand modern finance, economic stability, and the enduring role of tangible assets in an increasingly digital world. Join us as we uncover the profound transformation of these ancient metals, from circulating money to critical components of investment strategy and economic analysis. For millennia, gold and silver served as the bedrock of global commerce. Their intrinsic value, scarcity, and durability made them ideal mediums of exchange. However, the 20th century witnessed a monumental paradigm shift, the gradual abandonment of the gold standard and the rise of fiat currencies. This transition, culminating in the early 1970s, severed the direct link between national currencies and precious metals. This move granted governments unprecedented flexibility in managing their economies, allowing for expansionary monetary policies and counter-cyclical fiscal measures. Yet, it also introduced a new era where money's value was backed solely by legal decree and public trust, rather than a tangible commodity. Understanding this historical pivot is crucial for economists and investors alike, as it reshaped the very definition of money and value. Despite losing their everyday monetary function, gold and silver retained one of their most critical roles as a store of value. This concept, deeply rooted in human economic history, refers to an asset that can be held and exchanged for goods and services at a later date without significant loss of purchasing power. Unlike paper money, which can be devalued by inflation or government policy, precious metals have historically demonstrated remarkable resilience. Their inherent scarcity, resistance to corrosion, and universal acceptance across cultures have cemented their status as a reliable hedge against economic uncertainty. For investors, this means gold and silver often act as a safe haven during periods of market volatility, geopolitical instability, or inflationary pressures. Their long-term track record, spanning empires and economic cycles, provides a compelling case for their inclusion in a diversified financial plan. Beyond being a mere store of value, gold and silver transitioned into vital reference points within the global financial system. Even after currencies detached from a direct metal backing, the price of gold, in particular, continued to serve as an informal benchmark for economic health and monetary stability. Central banks, while no longer obligated to redeem currency for gold, still maintain substantial gold reserves. These reserves are not held for daily transactions, but as strategic assets, signaling national wealth, credibility, and a hedge against extreme financial crises. Historically, systems like Bretton Woods, though ultimately dissolved, underscored gold's role as an international anchor for exchange rates. For economists, tracking gold prices offers insights into market sentiment regarding inflation expectations and the perceived stability of fiat currencies. The post-gold standard era ushered in an explosion of sophisticated financial assets and instruments. Stocks, bonds, mutual funds, derivatives, and digital currencies now dominate investment portfolios, offering diverse avenues for growth, income, and speculation. These modern tools provide unparalleled liquidity, efficiency, and the potential for higher returns, often eclipsing the direct transactional utility of physical metals. This evolution meant that gold and silver became less practical for daily commerce, but more specialized in their financial utility. Their roles shifted from being the primary medium of exchange to becoming a distinct asset class, valued for its unique characteristics within a broader investment landscape. Financial planning now involves strategically allocating capital across these varied assets, including precious metals, to optimize risk and return. Silver's journey post-monetary detachment took a slightly different, yet equally fascinating, trajectory compared to gold. While it shares gold's historical monetary legacy and store of value properties, silver also boasts significant industrial demand. Its exceptional conductivity, reflectivity, and antibacterial properties make it indispensable in a vast array of modern technologies. From electronics and solar panels to medical devices and photography, industrial applications consume a substantial portion of annual silver production. This dual role means silver's price is influenced not only by monetary factors like inflation and investor sentiment, but also by global economic growth and technological advancements. For investment researchers, analyzing silver requires a nuanced understanding of both its financial and industrial supply-demand dynamics. Gold and silver never truly vanished from the financial consciousness because the fundamental human needs they addressed never disappeared. People continue to seek stability, protection against systemic risks, and assets that are not solely dependent on the promises of governments or institutions. In an age of unprecedented debt, quantitative easing, and geopolitical volatility, the tangible nature of precious metals offers a psychological and financial anchor. They serve as a hedge against currency debasement, a portfolio diversifier, and a tangible asset in a world increasingly dominated by intangible digital entries. Their persistence is a testament to their historical efficacy and their continued relevance as a countercyclical asset. Understanding this enduring rationale is key for anyone building a resilient financial future. It is crucial to view gold and silver not as a panacea for all economic woes, nor as relics of a bygone era. Instead, they are vital components of a comprehensive understanding of money, economics, and investment strategy. They remind us that financial systems evolve, trust is paramount, and history often rhymes. Their modern role is not to replace fiat currencies, but to complement them, offering a tangible counterpoint to the abstract nature of modern finance. For students of economics, historians, and investors alike, studying the evolution of gold and silver provides invaluable lessons on monetary policy, market psychology, and the enduring quest for financial security. This historical foundation empowers us to approach future economic discussions with clarity, informed by centuries of human experience rather than fleeting emotions. We hope this exploration has deepened your understanding of gold and silver's enduring significance. If you found this analysis insightful and educational, please like this video. Your engagement inspires us to continue providing valuable content that bridges history, economics, and practical financial planning. Share your thoughts in the comments below. What role do you see for precious metals in today's economy? Thank you for watching, and we wish you a blessed day filled with informed financial decisions.